Hi there, folks. Welcome to Sonia's Real Estate Connection on Blog Talk Radio and YouTube channels. Welcome, welcome, welcome. I am your hostess, Sonia Mays, real estate broker and owner of Midwest Executive Realty at Park Place in Milwaukee, Wisconsin. Our office is located in the 53224 zip code area. We are just east of Highway 145, Interstate 41, and west of 107th and Good Hope Road in Milwaukee. We represent buyers, sellers, investors, and organizations, as well as banks and financial institutions in their real estate transactions dealing with residential and commercial real estate. Once again, I'm your local trusted real estate expert and licensed broker in the great state of Wisconsin. My name is Sonia Mays and also Randy Jones. We're proud to serve the greater Milwaukee and surrounding areas in southeastern Wisconsin. I want to thank you for tuning in to this episode. It is always a pleasure to serve my listening audience in this capacity, and I'm always delighted to share my time, energy, knowledge, and resources with you. I'm here to educate and empower. All right, folks, we'll get right into it. Today, we're talking about the offer to purchase, the residential offer to purchase, basic and common contingencies. Specifically, we're going to explore the inspection, appraisal, and financing contingencies in the residential offer to purchase. As you may recall, last week's topic focused on how to purchase City of Milwaukee REO tax foreclosed properties. In that segment, we looked at the basic requirements and documents needed to successfully purchase a city-owned tax foreclosure. We went over the 4 or 5 items needed to submit an offer on a city-owned property. Number 1, the signed offer to purchase, the proof of funds or pre-approval, the earnest money check, the scope of work, and LLC articles or corporate entity documents for that type of buyer. In today's segment, I would like to take this opportunity to explore the most common offer contingencies in more details. Because we tend to get a lot of questions about this, and so I wanted to kind of clear the air concerning offer contingencies, especially as they relate to residential properties. The Wisconsin Offer to Purchase Form, otherwise known as the WB11 Residential Offer to Purchase, is a 9-page state-approved legal document. The offer identifies such basic information as who the buyer is. It identifies the buyer, the property you are offering to buy, the offer amount, the earnest money amount, close date, closing prorations, and then there are the contingencies. The ones that we'll be exploring today are financing, appraisal, and inspection contingencies. All are in place to protect the buyer. We'll start out with the financing and appraisal contingencies on page 5 of the offer to purchase. In order to complete this section, the real estate agent will need the buyer's pre-approval letter to fill in the information in this section of the contract. I always ask for this up front, and the reason I ask for a copy of the pre-approval letter is because the offer requires specific information relative to financing, such as the loan type, the loan monthly amount, the interest rate, down payment, and amount of loan. So if you're a buyer and you're not getting a loan, then we would leave this area of the contract blank or mark NA in the boxes, which stands for not applicable. If you're not obtaining financing to purchase a property, then that would mean that you're paying cash or you're a cash buyer. And in that case, then we would need a copy of your proof of funds document to submit with the offer. Now, if you don't have it at the time of the offer submittal, we may be able to still submit the offer, but we would need it shortly thereafter or upon acceptance of the offer. And that would only apply if it is a non-REO transaction. Okay, now if it is an REO or bank-owned seller or a city-owned seller, as we discussed at the last session, then we would definitely need the proof of financing document up front with the offer. Otherwise, we as agents cannot submit the offer. And this is something that is clearly stated in most REO offer instructions and REO rules. Now, sometimes we'll get a buyer who wants us to submit an offer without proof of funds. So might have a buyer who's saying, "Look, I want you to submit my offer. I'll give you proof of funds when they accept my offer," which we know it doesn't work like that. But okay, so let's say for in the bank, the bank has their rules saying that they won't review or respond to any offer unless it has proof of funds or proof of financing attached to the offer. In that case, they will either reject the offer or simply not respond until the offer is complete. In the meantime, another offer could come in that is complete, and the bank seller could accept that offer because, again, it is a complete offer. It complies with their guidelines and meets their net requirements. So if this happens, you could very well miss out on an opportunity to buy the property that you wanted if your offer isn't complete. This is why we try to get everything up front. We want to make sure that your offer is complete, that you have a strong offer, and that it is satisfactory to the seller, especially in today's market. This is a seller's market. It is highly competitive market. And so you want to make sure that you're putting your best foot forward and that you are presenting your best offer, and make sure that it is a strong offer and a highly competitive offer. Okay. Now, if you're still working with your bank and you're trying to get the pre-approval letter and you're just waiting for the bank to get you the letter, then I would suggest holding off on submitting the offer until you have the pre-approval document, especially if it's an REO seller. Because again, the REO seller, they're not going to accept the offer. They've already, 9 times out of 10, they've instructed their agent not to forward them any offers without the pre-approval or proof of financing documentation. However, if it is not an REO seller, then there may be a bit more latitude, and we could possibly get away with submitting the offer without having the proof of funds document attached to the offer right away. But we would need to secure that documentation within 24 to 48 hours or as soon as possible in order to keep the deal alive and to keep your offer on the table. Okay, so the real estate agent completes the offer to purchase. They fill in the information for the financing and appraisal contingencies and the inspection contingencies. And then there may be some additional provisions that can be identified in the Addendum A. Now, this is a separate document that is used to cover additional provisions such as closing costs, home warranty, radon or mold testing, and code compliance matters. This is something that we can certainly cover in another segment. But for today's segment, we're looking at the most common contingencies as it relates to financing, appraisal, and inspection. These contingencies are written into the offer to protect the buyer for their purchase. Now, if any of these do not pass or if any of these fail, then the offer can be canceled, provided other criteria are met within certain timeframes. So let's say the buyer fails to get the loan and doesn't meet the financing contingency as stated in the offer. They can then petition the seller to cancel out and return their full earnest money. And they do this by signing a cancellation and mutual release form. And so if this is the case, then this release gets sent over to the seller to release them out of the deal and return their earnest money. But the seller may also request a copy of the loan denial letter, because it's one thing to say, "Oh, I didn't get the loan, I want to cancel out, get my money back." The seller may ask for proof of loan denial. And that's when we need to get documentation from the lender indicating that the loan was in fact denied. Otherwise, the seller could say to the buyer, "Hey, look, I took my property off the market for you. It's been off the market now for 30, 60 days, 90 days, however long it's been, and I could have sold it to someone else. I've wasted valuable marketing time. I've wasted 3 months of marketing time, not to mention another potential sale." And the seller could go on, and they could threaten to sue the buyer for wasted market time and for the buyer's failure to perform, and they could sue them or threaten to sue them based on a per day calculations, and it could get pretty nasty. So it's important to do things in a timely manner to stay on top of things, as time is of the essence with all real estate transactions. Again, time is of the essence with all real estate matters. Another thing I want to mention here while we're on the topic of financing is that if the buyer's financing doesn't go through, this then presents an opportunity for the seller to offer financing to the buyer under the same terms that were written in the offer under the financing contingency lines. So that's another reason why we ask for the offer, the pre-approval letter when we're writing and typing up the offers, because we need that information to put on to fill in the offer. And so then if the buyer's financing doesn't go through, the seller then has an opportunity to uh, offer those same financing terms to the buyer. So the seller could say, listen, you didn't get a loan from the bank, but I'm prepared to offer seller financing under these same terms that you have written into your offer, because I want this deal to go through. I still want to sell the house to you. I want it to close on time on the original agreed upon closing time frame in the offer. So that's just another thing I wanted to mention, and that's another reason why that information should be completed in the offer to purchase with respect to the financing and loan information on the residential offer to purchase. Moving right along to the appraisal contingency, if the property doesn't appraise out, meaning that the appraisal has come in below the purchase price, and then the seller would have to make an adjustment down to match the appraisal, because they cannot sell above the appraised value. So the property must appraise at or above the purchase price in order for the deal to go through. Otherwise, they would have to make a concession and reduce the price based on the appraisal. Okay, so because they can't sell the house for more than what it's worth. So let's say you have an accepted offer at the price of $300,000. The appraisal came back at $275,000. Okay, so that's a $25,000 discrepancy, and that's a $25,000 loss that the seller is going to have to take, because again, they can't sell the house above what it appraises out at. So then you would have to you would prepare an amendment adjusting the purchase price from 300 down to 275. All other terms remain the same. You may have to change the close date if more time is needed, but that's just an instance of where the price would have to be adjusted down. And I've had that happen maybe once or twice, and I think it was about a $15,000 or $20,000 discrepancy, and we had to adjust down. And I represented the buyer, and so the listing agent, I don't know if they overpriced the property or what the case was, but it didn't appraise out, and we had to adjust the price down to the appraisal amount. And so it could have been, and it was a situation where maybe the comps that the appraiser used were different than what the listing agent had used, and so the seller is free, or they're welcome to if they want to question it or request another appraisal, they can do so, but it's going to be at their cost and at their expense. So that's just an example of the appraisal contingency and some things that could happen under that contingency. So again, we want to make sure that that information is filled out completely, and that the appraisal is completed within the stated time frame. Now, if the appraisals are running behind and they're not able to schedule the appraisal right away, then the agent can prepare an amendment to extend the appraisal and financing timelines. And if these items aren't met, then the seller could again say, Mr. or Mrs. Buyer, you failed to perform within the agreed upon time frame, and so I'm going to keep your earnest money. So the buyer's agent really needs to stay on top of things and make sure that everything is moving along accordingly and on time, because once again, time is of the essence with this contract, with the contract. And so another thing I want to point out is that when you extend the appraisal timeline, you also want to extend the financing timeline as well, because they run together. And you typically want to do these together, because if the appraisal deadline is extended from say 30 to 40 days, then that means the financing will also be running behind as well, because the appraisal has to come before the loan commitment or loan approval can come. So you're going to have to do those things together, and you want to adjust them accordingly, as well as your close date. All right. Okay, the last contingency that we'll discuss is the inspection contingency. And this is a pretty big one, because this one comes first. It comes before the others, and it will typically determine if the buyer is moving forward with the transaction. The inspection contingency language is included on the last page of the offer. Here, the real estate agent will check the box for inspection contingency, indicating that the offer is contingent upon a Wisconsin registered home inspector performing a home inspection of the property, which discloses no defects. Now, if you're an investor and and you're not going to hire a licensed inspector to perform a home inspection, but you want to use this time to have your contractors do a walkthrough of the property to give you an estimate on how much work needs to be done, how much it's going to cost to rehab or renovate the property, then your real estate agent should state this in the blank line so that everyone is clear and on the same page as to what's going to happen and who will be going through the house. Usually, the seller will be okay with this and will allow this, and all will be good. But we just want to make sure that, again, that everyone's on the same page and that we are being transparent with our disclosures and with the contract. But if you're doing a regular inspection where you're hiring a licensed registered home inspector, then the agent will check the box for the inspection contingency, and they'll fill in the number of days for the inspection contingency. Typically, we see anywhere from 7 to 10 day home inspection contingency from acceptance. However, what we've noticed is recently, due to a lot of home inspectors who are, they're booked up for a week or two to schedule out about 2 weeks out. So we've been seeing the inspection time frame extended out anywhere from 10 to 20 days because the inspectors are all booked up and they don't have any immediate openings, which is just crazy because everyone is just crazy busy, and we're running into the same thing with some of the we've had some tree issues with some properties here where we're trying to get tree estimates for tree trimming and cutting, and the tree companies and tree contractors, they're all booked up for months. We can't get in for 2-3 weeks. We got to book sometime next month, and it's like, well, we need this estimate, before we go to closing. So it's kind of putting a delay on things, or kind of pushing things out a little bit further. So, but typically, the number of days for an inspection contingency is filled in. Let's say, in the past, we've typically seen about 10 days on average, a 10-day inspection contingency. And so that means that the buyer will have, 10 days before the inspection contingency expires. What it doesn't mean that the buyer has 10 days to schedule the inspection. So, a buyer might see this and say, oh, I've got 10 days. And so then they wait till day 9 to schedule the inspection. And that's too long. You still need to get that inspection scheduled day 1, day 2, get that inspector in there, because we got to get everything done in this 10-day time frame, or 15, 20 days, whatever it is. That means everything has to be done. That means the inspection has to be done. You got to schedule the inspector to get in the property. Then they write the report up. They submit the report to you. You review it with your agent and determine if there are any major defects in the property. If so, are you going to go back and ask the seller to fix anything or repair anything, or are you going to ask for a concession or a repair credit? How much is it going to cost? You're going to have to get bids on it, and so that involves everything, as well as the amendment and any renegotiations. Everything has to be done within that time frame. Okay, so once that inspection contingency expires, we cannot go back and renegotiate anything based on the inspection report, or go back and ask for additional testing. Or, we want to look at this mold, we want to test for radon, or we want to, do further evaluations based on the inspection report. We can't do it, because once it expires, it's over and done with. We can't do anything else. We got to move forward and proceed to close. Okay, so everything has to be done within that time frame before that inspection contingency expires, because once again, time is of the essence. We've got to get things done in a timely manner. We got to keep things moving along. Now, you might be in a situation where you have to extend the inspection contingency for another 5 or 7 days. And I'll give you a perfect example. All right. Let's say the inspection report revealed movement in the one of the basement walls, and the inspector is recommending a foundation specialist to further evaluate the basement walls. If your inspection contingency expires tomorrow, and let's say you can't get a foundation specialist out to the property for another 3 days, then you'll need to extend the inspection contingency for 3 to 5 days to give you time to schedule the basement inspection. So you got to have time to schedule the basement inspection. You have to receive the basement inspection report, review it, discuss it with the agent, determine what the next steps are going to be, what the strategy is going forward, if you're going to proceed with the offer as is, or if you're going to approach the seller with new terms via a new amendment. If you're going to do a new amendment, then the agent has to prepare a new amendment. You sign it, then they get it over to the seller. The seller reviews it with their agent. They sign it or they counter back. All of this has to happen within this inspection contingency time frame. So that's why it's very important to understand what the number of days, what that actually means. Okay, so it's important to, again, just keep things moving along, do things as quickly as possible, so that we're acting accordingly within those time frames, because we don't want to let them pass by and then the opportunity is gone and we miss a date or a deadline. Because if you're a buyer and if you miss a date or a deadline, then it could cost you your earnest money. And so we want to be very clear on these time frames. And again, the goal of a buyer's agent is to protect the buyer's interest, protect the buyer's money, and make sure that the buyer is getting the best representation in the deal. All right. All right. So as I wrap up this session and come to a quick close, these are, again, the most common contingencies in an offer to purchase for residential properties. Now, there are many other contingencies in the offer, such as radon, mold testing, closing costs, and home warranty, which can be discussed in more detail. But hopefully, we just want to be clear on the most common basic contingencies in the residential offer to purchase. Again, inspection, financing, and appraisal contingencies, as discussed here today, and the importance of these added clauses in the residential offer to purchase contract. Lastly, if you're dealing with an REO property, then there will be a different contract set of forms and bank addendums to be used, and they do not allow certain contingencies. Now, you can still have an inspection on an REO property, but it will be for your information only, not to be used to renegotiate anything. Keep in mind that most REO properties are winterized, meaning that the water is turned off, the plumbing has been winterized, so there's no water, running water in the property, and they're not going to turn lights on, they're not going to turn on water, electricity, gas, or anything of that nature. They're as-is sales, buyer beware. Do your due diligence with these properties if you're purchasing REO. If you're getting a loan, then you can still use the financing and appraisal contingencies, but there will be additional as-is language in the bank contract forms to protect the bank seller. All right. Well, that's it for today's episode on offer to purchase contingencies. This was a very brief overview of the inspection, appraisal, and financing contingencies. There are many other caveats to the residential offer to purchase, which we'd be more than happy to discuss with you in more detail. As always, it is my hope that you found the information here to be useful and helpful. Keep in mind that there are other items involved in the offer process, and we would like to encourage you, if you're in the market to buy or sell, to make sure you have a good real estate agent and realtor in your corner. And that's what we're here for. Our goal today is to provide some clarity on a few of the most common offer contingencies. As always, we seek to educate and empower our listeners and clients. And I want to thank you again for tuning in to this episode of Sonia's Real Estate Connection. It is always a pleasure and honor to serve my listening audience in this capacity. Folks, if you have any questions about today's topic or any other topics you'd like to discuss or explore further, send them in, give us a call, or you can reach me, myself, Sonia Mays, or Randy Jones at our toll-free number, 844-777-7725. Again, that toll-free number is 844-777-7725, or at the office phone number 414-395-8771. Feel free to send us an email, info@midexec.com. That's info@midexec.com. And don't forget to check out the website, folks, midwestexecutiverealty.com. Again, that's MidwestExecutiveRealty.com. Again, I'm Sonia Mays, your local and trusted real estate expert and professional real estate broker. And we also have the commercial real estate agent, Mr. Randy Jones, who's doing some amazing things in the city of Milwaukee and the Sherman Park area. Be sure to check us out. We're at Midwest Executive Realty at Park Place in Milwaukee, Wisconsin. We are located in the fabulous zip code of 53224 in Milwaukee. Again, that's 53224 zip code. We are just east of Highway 145, Interstate 41, and we're just a few minutes south of Menominee Falls. All right. And again, we service residential and commercial properties as well as condos and REO markets. So thanks again, folks, for tuning in. I'll talk to you real soon.